Welcome back. Digitide Solutions is on our radar. Now, the company recently demerged the entity of Quest Corp, focusing on AI-led digital solutions. The company is betting on AI-led transformation and is eyeing 3x revenue growth by FY31. Let's talk about this and their overall business plans with Gurmeet Chahal, Chief Executive Officer and Executive Director at Digitide Solutions. Mr. Chahal, thanks very much for joining in. So, let's just start there. When you say that the focus is going to be on AI-led solutions and you could be looking at some more investments over there, what is the plan, and the near-term plan that you perhaps have in mind?
So first of all, Surabhi and team, a very good morning and thank you for hosting me. So for us, AI is the big bet. And the reason we are taking that bet is we believe AI is going to be value accretive for us. On one hand, it helps us to optimize the cost. On the other hand, it opens a lot of new opportunities and frontiers for us. So that's where we have taken a big bet on AI. We've invested in senior leadership from the industry. We are building our own platforms, and then we are partnering with some industry leading product companies. The approach we are taking, Surabhi, is a threefold approach. I call it the three lens approach. Lens number one is the lens of industry. So we will have AI for insurance, AI for banking, AI for healthcare. So that's lens number one. The lens number two is the lens of the process. So AI for customer care, AI for HRO, AI for F&A, AI for software development. Third is, which is most interesting, is the persona lens. So AI for CIO, AI for CTO, AI for CFO. So that's how we are making investments.
All right. Hi, Mr. Chahal. Good morning. Good to see you. Just let's get the numbers out of the way. I'm looking at your ambition with regard to profitability and return ratios as well. You have mentioned you're looking at 200 basis point margin expansion, in the next few years. Could you tell us what would it look like in absolute terms? Because your last year's numbers for the year, I think they were close to around 14%, but for the quarter, they were close to around 11%.
Yeah.
So this 200 basis points expansion takes the margin number to what? Point number one. Point number two is you're looking at scaling a business big time to $1 billion. Could you tell us on the core business, that's the current business, how much will the contribution be? Should we look at around 750 million and 250 million of inorganic? Could you split that up for us?
Sure. So you've got two questions. First, on the margin expansion,
yes.
The 200 basis point that we are saying in the 3 to 4 years is with respect to the 14% that we were at. So we are looking at 16 to 17% margin eventually. As we stated in our Q4 commentary, we are also looking at optimizing our portfolio. So we are getting out of some non-core business, and as a result, 1 or 2 quarters we expect the margin to be dipping as we do the cleanup. In parallel, we are also making investments, investments as a standalone company, investments in leadership, investments in some offerings. So in the short term, that's where the margin came down. But in the long term, we are looking at the 16 to 17% margin. So that was your first question. The second question, when we will be $1 billion company, think of it, we have to add about 650 million incrementally from where we are. So we believe roughly about 200, 180 to 220, roughly 200 will be through inorganic. The remaining will be organic. Traditionally, we've been growing at about 14% CAGR. So that means organically, we have to grow at about 16%. We are very confident given all the investments we are making. And for inorganic, we are already looking at certain segments that we believe are aligned with our investment thesis, our growth thesis, and are adjacent to where we play today, and we have a right to win.
Okay, Mr. Chahal, you've also indicated that there is going to be a ramp down on several non-core, low-efficiency businesses, and this happened, over the fourth quarter. How long will these ramp downs take? What will they mean in terms of loss of revenue, maybe improvement in profitability because they're perhaps low-margin businesses? And what will the implications be? Also on the AI front, yesterday we saw the big deal between Capgemini and WNS. So what does that indicate? Standalone BPOs, is AI a real threat? Just take us through, the contours of how the company is going to look like a year down the line when you complete some of these structural changes.
Yeah. So I think, look, why are we making these structural changes? See, today about roughly 70% of our business comes from BPM, 30% comes from technology, data, and AI. We want that 30% to be 40%. Secondly, we want our international revenues to grow from currently 40% to 50%. Okay. So the investments that we are making and the portfolio optimization is aligned to this direction, and we believe, this is where we can add more value. Coming back to your second question, look, yes, it's a marquee deal, WNS and Capgemini. The way I look at it, I think it's not about a standalone BPM as much. I think it was for Capgemini to add a BPM capability so that they can effectively compete with the likes of Accenture. In fact, I read an article where they're saying, hey, now they can also compete with the big four. So I think it was adding a capability, BPM capability. And look at the premium they've paid. So BPM is not going anywhere. The form and shape of it will change. And that's why we have gone all in on AI and we are getting ahead of the curve. Just to give you an example, when we declared our Q4 results, we did give this detail. Our customer lifecycle management business grew 16% year on year. However, there is a lot of AI now getting built into that business. We have developed our own agentic AI solution called QBuddy, which is coexisting with our human agent. So it has made it more efficient. That's why companies are seeing more value, and we are getting a lot of business in that segment.
Okay, all right. So looking at transformation and looking at scaling up on some of these businesses. Got that point, Mr. Chahal. Thanks very much for joining in, and we look forward to more conversations in the future. Thank you for being with us.